world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Lex Sokolin. Lex is a futurist and entrepreneur focused on the next generation of financial services. He directs Fintech Strategy at Autonomous Research, a leading research firm for the financial sector, helping clients understand and leverage innovation. Prior to joining Autonomous Research, Lex founded and ran NestEgg Wealth, a robo-advisor that pioneered online wealth management and was acquired by AdvisorEngine, a digital wealth management platform backed by WisdomTree. Lex is a contributor to the Wall Street Journal, CNBC, Reuters, Investopedia, American Banker, ThinkAdvisor, and Investment News, among others. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's show, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Lex Sokolin. Lex, welcome to Rebank.
My pleasure to be here.
I've provided a brief outline of your background in the intro, but I'm sure I've left something out. How would you characterize what you do?
It's one of these difficult existential questions. So foremost, I think of myself as a fintech entrepreneur. It's where my passion is. And then the two brackets are trying to be a futurist and figure out where things are going. And then also to keep kind of an artistic mindset, a creative and open mindset around it. So those are my three taglines.
Okay, so it's pretty interesting the way all three of those fit together. And so leaving aside your kind of investment banking career, which is all pretty boring.
Thank you for leaving that out.
Yeah.
I would also like to do that.
It sounds like your work has been, so now you're in this kind of fintech research position, which is really awesome. And the newsletter that you do and some of the more in-depth research reports are amazing, and people should definitely check them out, sign up to the mailing list. But before that, you started a robo-advisory company, and it sounds like you're also involved in some of the more creative aspects of things like AR and VR. How do you think of the various parts and the way they fit together?
Sure. So the initial push for me to get into the space and into fintech did come from Wall Street, but it came from a very formative experience early on, which was Lehman Brothers. I was lucky enough to have sort of a traumatic event in my career very early on. And so in some way, this is just playing out post-traumatic stress disorder in reaction to that. But out of that initial experience, there was just a lot of opportunity to marry tech and marry new approaches. And in a way, having the traditional route be challenged made the creative route easier. And so I started a fintech company called NestEgg Wealth, which was an early B2C robo-advisor that took a lot of what I saw in the high net worth business and took that software, transformed it, made it available in a self-service way. And that's a long story, and kind of we understand how digital wealth has played out. But it gave me, I guess, a little bit of scar tissue and courage to try and marry the things that I'm passionate about, even though they are a little bit like oil and water.
Tell me a little bit, and then maybe we'll move on to some of the stuff more related to your current role here at Autonomous. But that AR, VR kind of creative stuff, tell us a bit about that.
Sure. So I've always had a little bit of a split personality, where on the one side I've done Wall Street and investment management and law and economics. And then on the other side, I've been a visual artist and have worked with emerging technologies, since I was a kid, building websites and getting through college designing websites, for the theater department and things like that. And very early on, I started to think about how new media can challenge the way we interact with information. So if back in 2004, 2005, when people used Flash, I built a bunch of projects on how do you engage with information and how do you take aesthetic experiences and kind of blow them out of the browser. So one of the ideas then was, why do we... Televisions are little squares that tell stories, right? Film is a rectangle that tells a story, whereas the web gave us kind of any number of ways that you could interact with information. It could be in a circle, it could be in a sphere, it can be in a 3D rendered environment. And so I kind of put the new media piece on hold. And another kind of strain from the early 2000s were genetic algorithms and languages like processing, where you can make art using top-down computation. A lot of that now is happening bottoms-up. So if you look at creative artificial intelligence, neural networks that can make Van Gogh paintings or Cubist paintings. And so that trend's been going on for a while, and as I got more engaged in the startup ecosystem, I branched out back into the creative side, and so now I'm involved with a company called Lightshed. And Lightshed is a virtual reality and augmented reality production company focused on social impact. So it tells stories of refugees, it tells stories of different groups that had difficult experiences, but in a very personal way, because virtual reality is this empathy machine. And so I think we're in this moment where technology both displaces our employment, but also enables us to be much more human in the things that we create.
Well, I feel like we could do a whole another episode on AR and VR. In fact, maybe we'll get into more of it today. We'll see how the conversation goes. But yeah, it's been a while since you and I caught up, and it's kind of funny how it happened. We stumbled back upon each other just a few weeks ago. I had no idea you were in London. We went to college together, and this is really cool because you're actually the second person from college that's been on the podcast. I had Alex Tapscott on way back in episode 4. Do you know Alex?
I certainly know of his work,
yeah.
And I appreciate being in his company on this podcast.
Yeah, great. Well, I'll put you guys in touch. He's a great guy and clearly doing some interesting stuff in the blockchain space. So way back then, right? Like, I don't know, 12 years ago, whenever it was, you and I took econ classes together. And it's mind-blowing to think that now we're kind of, we have entered this world in which things like game theory are being put into practice in whole new ways via cryptocurrencies. Things like the way that, I don't know, concepts of money are being challenged, like the way that capitalism works, that economies work, that centralized monetary systems work are all being challenged. Like 12 years ago, that would have been inconceivable, incomprehensible. You're very tapped into the ICO space, the cryptocurrency space. What are you seeing? What are you most excited about there right now?
Yeah, so some very smart people have thought about the path of technology development, and I kind of, in large part, I'm very inspired by folks like Kevin Kelly, his book What Technology Wants, and books like Homo Deus. Then I had a professor at Columbia Law, Ibn Moglin, and all of them have put together kind of this thesis, right, that what may be unimaginable at one point when, it's 2005 and we're learning about corporate finance from somebody who writes macroeconomic textbooks, although it may seem unimaginable at the time, the Lego pieces are all in place. So one of the ideas that Moglin put forward was that the internet is kind of like a coil, and around it things congeal or happen naturally, right? So why is there content on YouTube? Why are people uploading millions of videos a month to the network? Why is there content on Twitter? Why is there content on Wikipedia? Nobody's getting paid, right? So if you kind of take a evolutionary approach to what technology and what software is, and you say it's almost this inherent property that comes out of human society, like it's this increasing fractal complexity, I think you end up with the current crypto space as this inevitable outcome, right? So if you listen to the original internet builders when they've just set up the first connection between the universities, they've thought of all of this stuff, right? They've thought about censorship and media and communication and digital money and all of the issues around it, 30 years ago. And if you look at the .com entrepreneurs, PayPal, right? They've thought of this stuff too. Like PayPal is old Bitcoin. And the cryptography piece and open source are all these Lego pieces that were, I think, in play when we weren't yet engaged in the ecosystem. And I think where we're incredibly lucky is that this complexity kind of came to fruition now, and we can participate in it. We can build it, we can invest in it, we can use it, we can talk about it, because now it's its own Lego piece for whatever comes next. And I think that's extremely exciting. Mm-hmm. I don't know if I've answered your question, but I do feel like if it wasn't going to be called Bitcoin or cryptocurrencies, it would be called something else. It would be some combination of open source and money, and it would have had to happen.
I mean, it's fascinating to think about the way that it all kind of, to your point, a lot of ideas that naturally follow on from other events and developments. I was watching a video early this morning. One of our friends, Dave Birch, was featured on it, amongst others, put together by Quartz. It was about kind of the future of money, and this specific video talked about an isolated island, presumably in the South Pacific somewhere. Should check my geography, but where basically they use these.
There are islands there.
There you go. Must be there. Where they had these massive stone, effectively tokens, I suppose, to use modern terminology. They almost looked like wheels. They were feet across, holes in the middle, and had effectively been chipped off of huge rock formations and kind of shaped in these very specific ways, and effectively represented money that had been used in this community, dating back centuries, if not longer. And often they just kind of sat in the same place because they were so heavy, it didn't make any sense to move them. So if I were paying you, this massive stone that was sitting right here would kind of pass from my ownership to yours. We would declare this publicly, and that stone would become yours. It wouldn't move, could still kind of sit in front of my house, but that value would pass to you. Everyone would know. There was no centralized authority. No one was keeping track of this, but it was just generally known. And now we're seeing that same concept effectively, made digital, and we're calling it Bitcoin, or we're calling it Ether, or whatever it is.
Yeah, I think not to go into totally crazy land where I live, but I think a lot of the things that people see happening in fintech today are symptoms. And they look at the symptoms and they say, oh, this is weird, this is different, this doesn't look like what we used to do before. And they kind of chew their nails and wrangle their hands and say, is automation really going to happen, and so on. And I think the nice thing for me is I've had the last year and a half to step away from an operating role in a roboadvisor and to look at fintech more broadly and put a framework around it that is almost cathartic in that it gives me an answer of what's happening and why. And that was a lot of work, but it feels kind of very satisfying. And the answer is, I think, with any amount of self-awareness, obvious, which is digitization is inevitable and boring. So the amount of existential sort of crisis that financial firms have about it is bizarre to me, because the story of digitization is boring and obvious. It happened in 2001 with Napster and the music labels, and then the same thing happened with Amazon and retail. And the conclusion is your revenues go down 50% and the rest are digital. And the digital revenues are in a winner-take-all market, so you better make some software, right? Finance and healthcare are more difficult to digitize because they are more human endeavors. There's more complexity, there's more unseen connections, so think about lawyers, regulators, power, capital, or how all of that stuff is. But it's a secular vector that's changing society, and that's where I get into a place where kind of biological or evolutionary thinking is helpful. And if you think of technology as something that carries complexity through the universe, through society, right? As humans create more complex systems, the systems then become more complex. Then technology is used to enhance that, and then the technology becomes more complex and creates more activity in turn. And so it's exciting, it's new, but at the same time, it's something we already know.
You used a great analogy in your most recent piece. You talked about alien life landing on Earth and people deciding whether to engage with it, to fight it, or to run. And you use this analogy in reference to cryptocurrencies. And playing off of that analogy, what's the best way to engage with cryptocurrencies for the advancement of mankind?
Yeah, because it is a tool, right? And technology, we like to kind of anthropomorphize technology into this other thing that exists versus us. But it's not. It's just our own ideas. The same way you write down ideas in a book, when you write down code, those are human ideas, right? Or when your teenager is staring into her phone, she's not staring into her phone. She's staring into a communication channel with her human friend. So these are just an extension of human ideas, but the crypto stuff does feel very alien. And so engaging with that is very tough when you have a particular way of thinking about the world. And I think it's not just go build or go buy. I think it's whatever role you have in the economy or in society, what you can do is find ways for there to be economic activity inside of the crypto ecosystem, right? So however you can encourage economic activity to happen. If you're a VC writing checks, great, write some checks. If you're a developer, build some things. There are things that discourage economic activity, right? So fraud and Ponzi schemes and so on, those are not great for people to use the tools. And I think also from a regulatory perspective, the knee-jerk reaction discourages the use of this technology. But there are clear ways to participate. And then another way to think about it, right, is that new tech always looks like a toy until it doesn't. And so this looks like a toy, but it's better infrastructure, so we should build on it and see where that goes.
Lawrence Wintermeyer and also separately, Simon Taylor have recently written great articles about kind of regulation of cryptocurrencies, ICOs, providing some advice to regulators broadly as to the way they should think about cryptocurrencies and kind of move to regulate them sooner rather than later and provide kind of a clear framework in which new issues can operate. I think that there are kind of two options. One is for regulators to view this as something completely new and different and apply what would I think most likely be relatively heavy regulation to it. Or I think there's also the chance for potentially with a bit of community engagement, i.e. crypto community engagement, regulators to view this as a an asset class similar to other asset classes that already exist. Perhaps currency isn't the right one to compare it to, despite whatever linguistic choices we've made. But perhaps maybe it's more similar to an equity security. And if it's just another type of publicly traded equity-like security, then maybe there are kind of existing paradigms in which it can fit in ways that kind of support the ecosystem.
Yeah, so two things on that. I think regulation is sorely needed because legitimization is helpful, and because we want consumers to use this stuff and to use it in their daily life, right? Not to copy character strings from one desktop app to a piece of paper or whatever, but we actually want people to use these things and to do it safely. And so the regulator, end of the day, is sort of society's embodiment of this is what we want to happen and this is how we want it to happen. And so to the extent you're in the part of the population that believes in society, which isn't everybody, it's a good development. Personally, I think the faster a forest fire happens and clarity and sort of best practices emerge, and a lot of that is going on already, the faster that happens, the better. On the other side, the difficulty is that crypto is global. The same way you have, BitTorrent, it has no home, it's everywhere, and it's nowhere. And the development of decentralized exchanges is super interesting, right? You can shut down Napster, but you can't shut down BitTorrent in the same way you can shut down Coinbase or the Chinese exchange, but you can't shut down AirSwap. But because it's global, it's super difficult to regulate, and what it feels like is happening in fintech and in crypto is that regulation is, in a way, the tip of the spear for global competition. So the way China and Russia think about crypto is almost like an attack vector, right? If it's a state-backed or state-controlled reserve currency that is in some way mined or owned by those governments, that's very different from how the US or the UK think about it, right? Which is consumer protection. We're in the first world. We don't really need this. It's nice, but we don't want people to get hurt, which is very different how from the developing world thinks about it, which is in the US, I might be able to get a global asset allocation for 6 basis points. I mean, literally, State Street just repriced the Spider family down to 6 basis points. You can get anything you want. In most countries, that infrastructure just doesn't exist. People would pay 250 basis points for an investment product, but there's no capital markets, so crypto is the best answer. So it feels like regulation on a global scale is sort of this country competition. And I think that makes it very difficult for good best practices to really emerge.
All right, so stepping back a little bit and kind of thinking about fintech more broadly, what are you most excited about in the space?
Yeah, I feel like I've been a little bit in the clouds already. I think that the platform shifts are accelerating, right? So blockchain, artificial intelligence, and then AI, augmented and virtual reality as the platform shifts are all happening at once. Before we had the web, and then we had 10 years to digest the web. And then we had mobile, and we had maybe 5 or 6 years to digest mobile. And now we have these 3 different platform shifts happening at the same time, and you can see kind of a lot of, panic is the wrong word, but inability to cope. So I'm very excited in how these technologies combine with human services and how we figure out where the human fits in. I think that's really the challenge of the next 10 years is for all the talk of hybrid advisors and human centricity, customer centricity, and figuring out where do the ethics sit inside of an AI engine, or how do we build the augmented reality layer in a way that people actually use? Like that melding together, I think, is really interesting and super difficult. And if any of I can go into a more concrete example that helps.
Sure. Let's hear a more concrete example.
Yeah. So one of these questions I just did in the last newsletter, and it's around insurance and insurtech, and there are two data points. The first data point is Farmers Insurance is training their claims agents who go into houses and figure out what's the damage, what's the fire damage or the water damage, and how much the claim is worth. It's training them using virtual reality simulations. So there's a video game rendering engine, and it renders houses with randomly generated damage. And the agents go through a training program in virtual reality to go through a whole bunch of scenarios at once. So you have humans learning on machine data, machine-created data. And then you take the same job, essentially the same job, and you have another company, I think it was called Tractable. And what they do is a neural network, a machine learning algo that is good at assessing car damage. So they've ingested, a huge data set of damaged and broken cars, crumpled bumpers, broken windshields, and so on. And all you have to do is take a picture of your damaged car, and then it goes into the system, and then the system gives you the dollar estimate for how much it's going to cost to fix that. So you don't have to send out a human agent, and in this case, it's human data, but with machine learning on top. And I think melding this and figuring out which of these models are going to work, and doing it in a way that is certainly ethical from a machine learning point of view, meaning it doesn't reflect biases we don't like, but also is sensitive to issues of inequality and unemployment, and giving people a sense of purpose and work. Figuring that out is like a huge responsibility, and I think anybody working in financial services, or who's a fintech entrepreneur, or who's now a crypto billionaire, needs to kind of be very thoughtful about the impact of the winner-take-all dynamics that software creates.
That's really interesting. There was a quote from something I was reading recently, which basically was around the concept that I think it was speaking specifically to Bitcoin in that example, but I think it extends to a lot of the software, the technology advances that we're talking about, which is basically that the values, the ethics, the morals aren't hard-coded into the system. If we want those, we have to bring them ourselves. So the way that perhaps the value exchange happens is coded into the system. The ethics aren't. And I think that kind of historically, we haven't necessarily been used to maybe thinking critically about the sorts of, I say historically perhaps we have been, since maybe 2000, as technology has really started to take off. Perhaps we haven't been used to thinking so much about bringing our own ethics and our own values to the way that systems work. I think now we're being forced to. And I think we'll have to kind of very quickly get used to doing that.
Yeah, so a couple of directions to go from there. I think it's one of these things where we're very early on in recognizing the problem, and I don't want to sound cynical about it, but I think most people are kind of blind to it in the same way that, so the new iPhone came out. The new iPhone projects 30,000 dots onto your face and then scans them with another device. All of this is invisible. It creates a rendered mesh of your face that's unique to you, and then it puts it onto your emojis, right? And the consumer experience of that is like, oh, cool, I can open my phone with my face, and I have cool emojis. Where, in fact, there's just so much difficult stuff that's bundled into this development. And I think we have to be very thoughtful about this, because software today really can be used for creating opinion and for creating outcomes. And I mean, that's not an exaggeration, right? So Facebook, Google, and Twitter are talking to Congress right now about it, where it's easy enough to create a botnet to create legitimacy around a narrative. And then it's easy enough with a digital lending platform, for example, to accidentally create a black box digital lender that prejudices against people based on zip code, which, by the way, correlates with race and income, right, and education. And so accidentally you create these outcomes that have ethical meaning, but that you didn't design. And the same thing is true for blockchain, for crypto. So you asked a little bit early about kind of where I think that the ICO and crypto world is going, and I have two directions. The first direction is pretty straightforward and understandable, which is the on-ramp between traditional financial companies and crypto as an asset class, right? So if I'm Jamie Dimon, or if I'm Goldman Sachs, or any of the large banks, how do we think about exposure? What products do we build? The CME just created the derivatives platform. And so that's, I think, an understandable human theme for the next few years. The second one is kind of the machine economy, right? So maybe crypto is not even for people. Maybe it's just a bunch of utility functions for software that has its own ecosystem that interacts with each other, right? It could be that in 20 years, 95% of token value exchanges are between machines that never touch a human. I mean, so those are, I feel like, are the two directions, and how we build software into crypto has ethical implications. You know, so for example, just one last point on this. Designing ICOs as honeypots. So designing an ICO that has a 50% discount, then a 40% discount, then a 30% discount pre-sale, and then no discount, and then you have bounties on top of that, and you have referral codes. Those are all software design decisions, but they take advantage of behavioral attributes that people have. So you can essentially motivate people to invest in something that only because it's expiring, right? And then you build that into software, and then you scale it 1,000,000 times. And so I also wouldn't be surprised in the next 5 to 10 years to see this type of almost financial warfare, where I can create a whole bunch of financial honeypots in an economy, the same way that I can create a whole bunch of Twitter botnets to spread a message. And so we just need to be aware of that.
Before we go, I'd love to get your thoughts on the way that kind of the quote-unquote robo-advisory space is headed, given your experience there. So you started, I think, one of the earlier B2C robo-advisors. Some people kind of see the space now, this quote-unquote robo-advisory space, as dead or dying. I know you have the likes of Schwab and other large brokerage houses kind of implementing their own platforms and looking to compete. Surely to kind of fend off the Amazon-esque disruption of retail that you referenced before. But I think that kind of the people that view robo-advisory as like a passing phase are kind of missing the point, and maybe their perspective isn't as broad as it could be. I think that inevitably data plus smarter software plus contextual delivery, it's applied to everything from cabs to retail to house swaps to, in this case, financial management. I mean, it's only going in one direction, which is it's going to enhance the way that that people manage their financial lives. What's your view broadly on the quote unquote robo advisory space?
So it's never been a better time to be, and this is from an American perspective, it's never been a better time to be a consumer of investment management product or a consumer of financial planning. You can get a pretty incredible value proposition for 25 to 50 basis points. You can get a global asset allocation that in the year 2002 at Goldman Sachs would cost you, 150 basis points for 6 basis points in the product, another 5 to 10 basis points in the asset allocation, another 5 basis points for the software delivery of it, and then all-in cost, 25, 40 basis points for this. And that will come wrapped together with data aggregation. So everything that you have across everywhere, how does it look together for free? You're not going to pay for this. People will give it to you. Personal Capital, Betterment, Quovo, all of those companies. That's going to come with goal-based financial planning, which is kind of the correct way to deliver financial product to a human, right? You don't sell them investment funds like, here's my best investment fund that I picked for you, because that goes back to that behavioral issue. Goal-based planning starts with the customer and says, where do you want to be? Who do you want to be? What's important to you? And then back solves using investment product as a tool. And so as a client, it's awesome. It's spectacular. So I don't think digital wealth is over as much as the initial creative moment has dissipated into influencing the financial incumbents to adopt it broadly, right? So the fact that Schwab and Vanguard and Bank of America and UBS and JP Morgan and Wells Fargo and every single asset manager and wealth manager now have digital wealth is in a way the success and of robo-advice and digital wealth. Where the failure is, if you call it a failure, it depends what matters to you, is to create a meaningful, independent fintech brand that is self-sustaining for the long term. And I think that's true not just in robo-advice, but in fintech more generally, right? So the robo-evolution was first B2C, then B2B2C, because you can't acquire enough customers to sustain your operations. A couple of bets are out there with several $100 million in venture capital for marketing to build their brand, and they're still out there to try and prove the model, and most likely they'll persist as brands, but not as a good return on the venture side. And then after that, it's really kind of the from the B2B side, it's for the large incumbents how to pull that in and offer it to their own customers. And that's exactly the same thing that's happened in digital lending, and it's the same thing that's happened in InsurTech. Let's just wait how long it will be until Lemonade offers this private label. And it's the same thing on the mortgage side of the equation. So I feel like it's a bigger challenge for the industry to figure out how to build standalone businesses.
Yeah, but I mean, it's so quickly getting beyond just, I don't know, how should you allocate your, I don't know, retirement savings across which asset classes? Like it's I don't know, isn't it the same as what some of the, I don't know, what Monzo and Starling are doing in the UK with kind of budgeting auto built into their current account, the likes of what was the app that was it Chase just the other day, Fin that they just came out. I mean, it expands so much more broadly than just like your traditional investment accounts to really like take in, and I suppose that's kind of back to your goal-based planning component. But I don't know, if you're looking at mortgage, car, education, daily coffee, employment trajectory, and kind of projected revenues as a result, it's just so expansive that I think, sure, the Betterment Wealthfront model where you're taking very low margins and trying to ramp up AUM as quickly as possible on a relatively narrow kind of product focus. I don't know if that's the future, but I do think that the future, given all the data, given the contextual nature of the way we're operating, given the increasing intelligence of software, I mean, it captures everything.
It's an interesting journey because for a while people were saying fintech is unbundling banks, and now the stuff is being rebundled, right? So if you look at SoFi or Number 26 or Acorns, you start in one financial product category. SoFi, it's the lending side, and Number 26 is the neobank side. Acorns is the where is it, Stash? I'm not sure, but one of them is trying to also do deposits. The investment side, and building that initial kind of audience is really, really hard. But if you've raised $1 billion, that's doable. And then once you're there, you're rebundling investments with advice, with automated financial assistance and PFM, right? The Mint stuff. You're putting it into voice, you're putting it into chatbots, and you're putting AI on top. So that rebundling is happening. The question for me is, who's going to do that rebundling? and it does not feel like it's the banks, right? So if I look out a little bit forward, to be a manufacturer of financial product isn't all that great, unless it's a very special financial product. Because the future is, again, maybe a little bit Black Mirror, but the future is we're all wrapped in a mass customized AI assistant, most likely owned by either Facebook or Amazon or Google or Microsoft. And this AI assistant does everything for you because it knows you the best. It knows your search history, it knows all your friends, it knows all your photos and the faces of all the people in those photos. It knows if you like cats or dogs. It knows of the 125 dog breeds, which kind you have. It knows all your financial data, etc. And this isn't bad. It just happens that you're in a bubble that gives you everything. It gives you movies and clothes and food and financial products. And again, that's good for the consumer because no consumer ever has said, I now want to go shop for a mortgage. They say, I want to live with my family and I need a house. What do I do? And so in that bubble of virtual financial assistant, finance product is one small, tiny feature. And you see this with Amazon lending, and you see this with Facebook payments, that there's a platform on which humans have interactions and have economic activity. And by the way, I think crypto is exactly the same, right? So there's a platform where the economic activity happens. And then some people manufacture product and it plugs in. And so I think the conclusion of robo-advice and neobanks and insurtech and all of this stuff is on-demand, predictive kind of machine learning agents that not only give you homework but do the work for you, like Digit. They'll move your money, they'll open the accounts, and all you have to say is, I have a kid, and the next thing you know, you have your 529. So I think, again, it's amazing for the consumer, but you have to be very thoughtful about how to build the business if you're an entrepreneur.
Well, look, we could go on for days. Wow, we've covered a lot. I feel like we should give people time to digest all this, to let it sink in, to think about, importantly, the implications. Maybe we'll pick it up again at some point in the future. Lex, what's the best way for people to connect with you and find out more about your work?
Check out next.autonomous.com. Autonomous Research is the firm where I'm building the fintech practice. We have, as you mentioned, a weekly newsletter that touches on these themes, and it has this futurist angle and some magenta branding, so highly controversial magenta branding. So check out Autonomous Next. It's the best way to stay connected with the thoughts. And then on Twitter, follow me at Lex Sokolin.
Great. Well, it really is amazing work that you guys produce. I would highly encourage everyone to check that out. Lex Sokolin, thank you very much for joining us today.
Happy to. Thanks.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.